Hey traders, welcome to Charts and Coffee. Hope everyone's doing great this morning. We have a big morning of data. This is the biggest morning of data for this week. Bigger than FOMC meeting minutes, bigger than the GDP number yesterday, and that is the PCE. This is the Federal Reserve's pet inflation number. This is their fave. And this is the one that will influence what they will communicate about inflation in the most intense way. And that's what we've got this market dealing with right now. So many of you, including myself, probably taking a look at those short-term time frames, taking a look at, say, a 5-minute chart, saying, well, what does this ultimately mean to the indices? What's going on with equities based on this number? And I'm going to move this 5-minute chart over to the right edge here. And there we go. So if we take a look at the S&P, here we go. We take a look at that S&P at right here, 830. Take a look, gang. Take a look. Couple cool things on this chart I'm going to point out. One, look, before we blame PCE for the foul mood of the S&P, take a look at the trend that was really established basically once we got to the European Open, that 2 a.m. Eastern. All right. So that's one thing we want to keep an eye on. We were already quite bearish from that Paris and Frankfurt Open. Going into London, continued lower. Going into the Asian close, continued lower. 7 a.m., that first cup of coffee in New York, going lower. And then finally, the reaction to the PCE. What's kind of neat, though, if you're thinking about structure preceding a high impact event, look at the clarity that the grab candles gave. Look at the resistance of, you can see the HPMR, and very interestingly, look at how once we sold off, we actually moved in a very historically accurate way. The HPMRs did not flip. We see the resistance in the red zone. We see the support in the green zone. We see the zones are quite large, as they should be on a Friday, right? And with the hot zones that are often released on Friday, think non-farm, think PCE. So we're going to have a wider volatility zone, but the zones are holding really, really well. And that gives me, look, it's not about bullish or bearish, but is the structure high quality enough? Is the structure clean enough to help with understanding where we could react to, be a buyer, be a seller, whatnot. I do want to take a look at bonds. And by the way, if you have any questions, type them on in. All right. And let's see. Did I start the show early? Oh, yeah, I did start the show a bit early. Yeah, I don't even know. Yeah, I've been up for a long, long time. Or no, yeah. I did start the show. You guys get some extra. Y'all get some extra time. I thought it said anyway. Bot saying early, and it surprised the heck out of us already. All right. Yeah, a little extra time. I guess I'm very excited with everything that we've got going on. PCE is going to reveal a lot for us, gang, because look, whether the overall equities, the indices want to head lower or whether they want to head higher, the bottom line is that the clarity we get from hot zones around jobs, inflation, and growth are going to make a huge difference in the way and the steadiness of the Federal Reserve messaging. So we definitely want to keep that in mind. Bot says early. Yeah, that is pretty funny, Bot. Keeping everybody on their toes, right? Okay, so ZB did pretty much what the S&P did. Quick move to the downside. Lots of weakness in that pre-market, which is European and the UK. Asian close, early US. And then now, interestingly enough, even though we sold off quite a bit with 830, bonds have recovered a lot of those losses. For a moment, though, let's do this. It's easy to get caught up in a 5-minute time frame. And by the way, for those of you that did not catch my free video last night, I think I called it something like FOMC shenanigans, something along those lines. Remember, gang, if we're looking at 5-minute time frames, we're going to absolutely be affected, be rocked oftentimes by the way in which FOMC events, FOMC members, data like today's PCE, things like that are going to upend a very short-term time frame. One of the best ways to handle, and I'm going to show you this on the 1 hour ZB, one of the best ways to handle action like this when we are in a very prickly macroeconomic environment is take a look at a longer term time frame. We dedicated the webinar that we had yesterday was all about, it's not just the tools on the chart, but it's the time horizon. How long do you plan on seeing follow through? And it's the time frame we're on. This is a buy the dip, gang. Even though that was a very volatile candle, look at that 8 o'clock 1 hour candle in the bullish structure. That's a buy the dip. It's not a clean one, and I don't know that I love it, but it is a buy scenario. Speaking of buy scenarios, on the 21st of this month, the ZB ran into the support of the DPMR. And if I look at where we are in relation to the 124 handle, which was basically what we sank down into, right? The 124 handle on the bonds, which applies to TLT as well. We're up on that trade by a full point. And I know for me, if I don't want to be subjected to the kind of, rocket and roll in the 5 minutes been subjecting us to, just lengthen the time frame. So I think this is a really interesting place we're in, where we do have the ability to say, look, Jerome Powell and company, I'll trade through your shenanigans. I'm just going to do so in a way that allows me a shock absorber to handle it. I'll wait for my zones. They're going to drive prices into those zones for us. That's why we love volatility as traders, right? But we have to be able to measure it. Okay, so let's grab some questions. We got some, can see some great ones already coming through. Awesome. All right, first one. Oldie Locks asks, what do I think about long DBA calls into the daily wave? All right, so let's take a look. I'm going to jump on over to that tops layout where I prioritize tools like Grab and Wave and Darvis on this particular layout. And the question is, do I like this into the wave? Tell you what, Oldie Locks, what I would do with this, and this is a very specific set of candles. It's a very specific set of grab candles. Look how many blue grab candles we have in a row. Oh, hang on, my lighting is really dim, isn't it? Oh, there we go. That might be too much. All right, that might be a little better. So if we take a look at the 1, 2, 3, 4, 5, 6, 7, right? Blue grab candles, Oldie Locks. This is where I tell members who ask me, oh, that's on the 1 hour too. But I would say that 1 hour chart, sorry, you asked me about the daily though, didn't you? That 1 hour chart, see, I get so geeked out when I see those blue grab candles. My fans of the squeeze, that's a precursor for me to consider a momentum breakout. On the pullback, yeah, keep an eye on 2020. Oldie Locks, 2020, got some nice Darvis levels of support. Got the 21 propulsion, green structure, mean reversion would be great, but you might find a few aggro levels starting at 2030 down to 2020 for that buy. But tell you what, we may not get there, right? We may not even touch that 8 exponential moving average. So what I would say is DBA might be a really good squeeze play off that 1 hour. All right. Let's see. SPX, do I think we can buy the dip in SPX as well? I'll tell you what, Ari, we've been watching the S&P futures, which would map to mini, obviously the mini futures ES, micro futures MES, SPY ETF, as well as the SPX for those of you that like that particular symbol. So I would say the SPX would be buyable pretty much precisely when the ES is also buyable. So let me just give you those zones. These are going to be valid for today. And then on Monday, we'll recalculate what those zones could very well be. But right now, I need to move minimally, and you can see it on both these time frames. I need to move minimally to 39.62, say and a half, to 39.31. Right? That's what I would keep an eye on. But that's today. That zone, based on the DPMRs, is valid for the day because we look at the historical volatility based on the day of the week. So that is the historical Friday volatility. We'll get the historical Monday volatility on Monday, and we'll operate with this dynamic. Look, we all know Monday is not like Fridays and Tuesdays not like Thursdays. Each day has its own volatility, and they will be reflected here. Now, as far as a buy the dip in terms of market structure, right? If we want to do a mean reversion on the SPX or the ES, I'd say probably not, right? I'd say probably not. We want to wait for very likely the DPMRs. One of the things that we've been looking at and waiting for in the Sector Secrets Mastery is NASDAQ potentially as a buy. I need a price pattern. Ideally, I still need to see some support within the wave. And even better, I need to see as you can see here, I'll make this chart a little bit smaller. I want price to sink back into the DPMR. So that would be really, really the key to that. I need the prices to sink down into that DPMR area, which, by the way, I need to get down to at least 11.9 before that becomes a volatility-based support. All right, let's grab some questions from our YouTube channel, my YouTube channel at RagheeHorner.com, and of course the Simpler YouTube channel. And Tom, how are you? Good morning. Oh, great presentation last night. I am joining. Gosh, Tom, that's awesome. Anyone who joined last night should have already access to the DPMRs. And of course, you have access to the Sector Secrets Mastery. For those of you that are already part of the Sector Secrets Mastery, remember, we are extending your current subscription, right? So if you're a member, you had member pricing with the Sector Secrets Mastery extension. So whatever you've got, we're just tacking on time there. So I'm super stoked. Thanks, Tom. That's awesome. I had a great time doing it. Trish put a great presentation together, and got a shout out to Lorna Bot for an amazing DPMR indicator. Yeah, we are stoked to start showing you all what this is capable of doing and what we've been testing for so long. It's been doing. All right. Next up is Stacy. Thank you very much. I appreciate it. I believe y'all can get the replay over at simplertrading.com/auto. So for those of you that want to catch what the conversation was all about, simplertrading.com/auto. All right. Hey there, Sergio. Good morning. Do the DPMR zones change if I don't have extended hours on? Do they change? Yeah, they'll change. Right. Oh, absolutely. I like extended hours because I want to see some of the influence of the pre-market, most especially in indices, but I leave it on in equities too. Yeah, absolutely. Absolutely. All right. Next up is Ricardo asks, where can I get last night's webinar? I can't find it anywhere. Yeah, no worries. So Bot shared that with you. The webinar is at simplertrading.com/auto, and you can sign up for the class at simplertrading.com/masterclass. Love that URL. But yeah, check out the webinar, gang. I think the webinar is going to give you a really good idea of what we're doing, what time frames we're doing it on, why the multi-trend, understanding trend structure has to be first. You see me do it here on Charts and Coffee every single day, right? All right. Penelope asks, how do I get your multi-trend? I've looked everywhere for it. So Penelope, if you are a member of the Sector Secrets Mastery already, if you're a member, there's a number of tools that I make available to Mastery members. That is one of them. The last handful of classes that I've done also include the multi-trend, and the current class that I'm doing also includes the multi-trend. It's a key component to what we do. Yeah. So it's available I make it available to Mastery members, and we include it on, gosh, at least the last handful of classes that I've done. All right. Okay. So what else do we have here? Moving down the list. I appreciate that, Anne. Thank you so much. Ari, you got the levels? Yes. Awesome. Awesome. I'm happy to give those levels to you all. Next question, next symbol is Edwards asks, when will the DPMRs be offered as a separate product? When will it be offered as a separate product? I do not know. There's usually a little bit of a delay from when we offer the class to the subscription of an indicator. I actually don't know when that will be. I can tell you that when they are available standalone, they're going to be roughly I think they're $97 a month. The reason I mention, look, whenever there's a sale at Simpler, I like letting everyone know. One of my indicators or classes is on sale. I love letting you all know. What I will tell you this is, with the class, even at the basic level, you're going to get a certain amount of the subscription with the class. And while I love that everyone's interested in the indicators, it warms my heart. That tells me that you all get it. It's not just about price, it's volume, it's time, it's volatility. And you all are so rare that you understand the 4 factors. I love this community for that. However, in terms of using volatility, there are things that we need to know before we just look at the zones on the screen. One of the chart examples that I remember Trish put in the webinar was, hey, what if I buy in a chop? What if I buy in a downtrend and I'm not conscious of that directional bias, that dominant psychology? No secret squiggle in the world. That's what I call my indicators, right? No secret squiggle in the world is going to be able to outrun fighting the dominant trend. So that's such a big part of that. And so I love that everyone's interested in the indicator, but it is a whole system. It is a whole automated system where we've color coded things. We're identifying support and resistance automatically, and it is using all these tools together. So just putting that out there. I don't want anyone thinking there's some indicator that's just a holy grail. The process is, is what works. All right, Zane asks, do I use a put call ratio in my day trading? Zane, I actually do not. And I have actually never really liked it. I really don't like it right now because of the popularity of the zero dated options that have become so popular. SPY, QQQ, SPX. I think it's skewing that put call ratio in a way that really renders it wasn't that useful to begin with, in my estimation. I don't use it. So again, a friend of mine used to have a saying, I don't want to yuck somebody else's yum. If you find, again, let's talk about process, right? Why does that DPMR 1 hour short-term swing trading work? There's a process, yes? So it's not just the DPMR, it's everything that's working with the DPMR, like a band on stage, right? Just can't have the guy out there with the tambourine. So to me, a put call ratio all by itself is the guy out there with the tambourine only. What else are we using to take, for example, that tool you're talking about, Zane, and make it process driven and increase the probability that it's giving you a proper environment or directional bias? If you can go through that process, right, then I think you're probably on the track of adding something useful to your process, yeah, to your personal process. All right. Let's see here. Next up is, good morning. Hey there, Frank. From yesterday's webinar, do the Darvas 3.0 boxes handle manually having us physically look to find support and resistance zones? So none of the Darvas that I offer. Okay, now I can't account for other people's Darvas. Darvas is a gentleman named Nicholas Darvas, and while my Darvas isn't exactly Nicholas Darvas's work, I like to give credit where credit is due. We stand atop the shoulder of giants, And it's sort of my homage to one of my favorite traders when I was coming up as a trader in the late 80s and 90s, late 80s to early 90s. And so Darvas 2.0 is one version. And then Darvas 3.0 is a premium version that includes chart patterns within the formation of a Darvas box that I think are really important to see. So there's a subtle difference, and it's the signals that are included with 3.0 as opposed to 2.0. The actual levels are exactly the same, and they're all automated. There's no settings to change, because it's not about, using a certain setting, period setting. It's completely automated. So whether you're on 2.0 or 3.0, it's completely automated. The only difference is if you want those chart patterns that I like to see within that box. I hope that makes sense, Frank. All right, next up, what expirations am I looking at for the 1 hour? I don't go quite as far out with the 1 hour as I would the dailies. So it'll usually be no more than a month. So the daily time frame options, I like to have more time. I like to have more time to expiration. And you know what I realized? I have no idea what time it is. Speaking of time, I started the show early and I have no idea what time it is. All right. Oh, there's my clock. Okay. So the idea with the daily contrasted with the 1 hour, both of which I use with the DPMRs, is the 1 hour becomes an more affordable trade because we're using, say, an expiration of 30 days or less. And our time horizon's also far more nimble, but it's not day trading, right? It's not day trading. All right, next up is, what are the NQ zones? Sure, yeah, we have the chart right up here. Hey there, Ian. So the NQ, again, I don't mind to be a short seller, especially since now the structure is neutral. So the resistance zones for today, gang, are basically 12,300 to 12,435. To the downside, 11,880. You can call it 11,900 to 11,750. That's what's the upper and lower daily price movement range zones on the NASDAQ futures. All right. Will I be posting last night's webinar? I think you can either access it or it's playing over at simplertrading.com/auto. Same link that we were talking about for the registration of the webinar. Thank you, Eva. What is better, or the difference between NQ and SPX? Donald, that's a little pineapples and apples. They're both great symbols, though. The NASDAQ futures are a futures contract that represent the NASDAQ 100, while the SPX is one way that you can trade the S&P 500. It is not a futures contract. So two different indices, and the SPX tracks what's happening in the S&P 500, while the NASDAQ is obviously the NASDAQ 100. So two very different markets. And one of the things that I like to do when we talk about, well, what's the sector secret? Think about the difference, Donald, in the weighting. What's in the NASDAQ, right? Because what I just told you is useful, maybe, but you might want to say, well, Rog, what's inside both of them? Why do they move, right? NASDAQ is tech. NASDAQ is XLK, XLY, XLC. S&P is also tech, but it's also got financials and healthcare. So they do move for different reasons. Yeah, they do move for different reasons. All right. Oh, by the way, you know what? I just remembered. And I know Bot has said this. Let me show you all something, because if you go to the simplertrading.com, it's Simpler Trading YouTube channel, the very channel that most of you are probably on right now. Head on over to the Simpler Trading YouTube channel, and you will see that under the live tab, see there's home, videos, shorts, live. The video that I was alluding to about the FOMC is right there, taking advantage of FOMC shenanigans. Check that out. That's going to show why the time frames I'm trading right now are really the key to what's allowing me to deal with things like Bostic. I'll tell you straight up, gang, we had a number of day trades on. We were buzzing away, doing some great day trades, and here came Bostic. And I had to take some medicine on trades that moved past my point of validity. But my 1 hour charts, my daily charts are fine, if not up. right? Because they can absorb what these FOMC members often do to the markets when they start talking. Okay, check that out. Taking advantage. Live is where you can see right now webinar Discover Raghee Horner's new automated. Okay, you can check that out right there. And that's at the Simpler Trading YouTube channel. All right, thank you so much, gang. I am out of time. And I will, by the way, this particular recording will be available a few moments after we're done. My Sector Secrets Mastery folks, I will see you all in just a few moments. Let's take a look at what's happening on our short-term time frames and see what's happening with some of our daily and 1 hour alerts in that room. Again, if you've joined the class, you get time with me. You're going to have either a month, 2 months, or 3 months with me in the masterclass, with the mastery and the masterclass. And if you're already in the mastery and you're taking the masterclass, we're just going to extend your current membership. I'll see you on Sunday for the Raghee Report. Be good to each other.